Hindalco reported its Q2 earnings a short while ago, and those results have disappointed analysts. Gargi Parikh joins us with the review. Gargi.
That's right. Hindalco results have disappointed the street. They are below what analysts had estimated, and net profits are close to about 340 crore rupees, and net sales are at about 4,900 crore rupees versus 5,600 that they had posted in the same quarter last year. And the main reason for decline in their revenues, again, like all metal companies, has been the decline in prices for metals that we have seen from last year levels, where they had peaked out in the month of September and October. And aluminium production, however, for Hindalco, we are expecting that there must be a growth of almost 9% from last year levels. But an important point here to note is that interest income for Hindalco has dropped by almost 22%, considering that the surplus cash that the company had on its books, they've used that cash to pay back some of the loans that they had taken for the acquisition of Novelis, and that's the reason that interest income has seen a bit of a decline. Coming to segment specific results, for aluminium, we've seen the business almost 20% from last year levels, and that too mainly because of the kind of decline in prices that we have seen from last year. Also, the margins for the aluminium business almost half from last year levels. They are at about 18% versus 33% in the same quarter in the last year. And we've also seen that raw material expenses have seen a sharp increase, while power costs have reduced a bit, so that has cushioned the margins a bit. Otherwise, we would have seen margins even lower. However, copper business declining only about 8%, and that is because of the lower TCRC margins that we have seen. Though TCRC margins declined only very small decline, but our copper business taking a hit of close to 8% in this quarter.